We've never actually discussed dividend stocks or passive income on this channel. We've only discussed growth stocks, speculative investments, and those have done really well for us in the past. We've made a lot of money, but times are changing. So I'm going to tell you guys how I prepare for changes in the stock market, these changes that are about to come. And we're going to be talking about setting up some new portfolios for the channel. I think you're going to like what I got for you, so stick around because we're going to be starting right now. Hey, what's going on? It's Pat from Top Ticker Trades. If you're new here and you want to learn how to use stocks and options to make your portfolio go parabolic, make sure you start now by subscribing and tapping that bell so you never miss an upload. What is going on, everyone? Welcome back to the channel. I've got a very exciting topic for you today. Well, maybe it's not so exciting, but at least it'll get your bank account excited and your portfolio. This is a topic I've never talked about before on my channel, but I figured it was time because times are changing, and who better to bring on my channel to discuss this topic with than my good old pal Chris from Spot On Analysis. Chris, how you doing today?
Doing pretty good. What's up, Ticker family?
Ticker fam, get ready. This is a new topic. You're gonna love this. You're gonna want to hear about it. So today we're gonna be talking about dividends. And now before you click off of the video, listen. I know that you guys, especially all my listeners, you guys love growth stocks. You guys love the speculative stocks that move very quickly. But times are changing. You know, you got to have a long-term, you got to have your long-term investments that are earning you money, and you have to have balance in your life. You have to have balance in your portfolio. Now, Chris, can you talk to them a little bit about balance?
In terms of balance, it's a lot of ways to look at it. One of the ways, I believe, the most popular way that I feel like would be beneficial for the Ticker family is you want to have stocks, bonds, income generation, appreciation of securities. So you want to be able to maximize the value of your portfolio from all angles. And to do that effectively, it's important to be balanced in all facets of your portfolio.
And can you tell them a little bit about why? Why do we want different equities, different securities in our portfolio?
Well, in terms of change, the only constant is change, and we have different we go through different phases and periods in the business cycle where you have expansion, contraction, growth, and you want to be able to capitalize on each one of those no matter which phase the economy is in. So in order to be able to attack the different phases of the economy, you have to be relatively balanced in all areas and financially sound in your portfolio.
And is that kind of to keep your portfolio from just tanking if you're in one asset class as opposed to having several different asset classes in your portfolio?
Well, in a sense, the most important thing I feel like a lot of investors are worried about is, you know, as you mentioned, tanking and losing, but they want to gain. And when you are risk adverse and that operate in that theater, what you want to do is be able to eat all the time in all phases of the economy. So what we're going through right now is a change of administration, a new political party, and this party has got a long track record of having inflationary fears attached to it, whether warranted or not. I'm not here to discuss politics, but the fact of the matter is a lot of it, the I word gets thrown around when you have Democrats, you know, in the White House. So where you see a lot of the economy going now is into a lot of heavy capitalized commodities, lumber, minerals, mining. You'll see a lot of those companies, gold, silver, platinum, start to increase in value, and that's where all the dividend guys really reside, is in those companies. So you'll see a large shift there. So it's important that you get there in time and not overpay.
And I'm glad you brought that up because I almost forgot. You actually dropped a video today, and the commodities that you're speaking of, I know you did a video I believe it was the top five or the best five rated dividend stocks. Am I correct? Or
Yes, the five best rated stocks. We all know it's been kind of quiet on the neo scene, and I wanted to kind of get out and have some fun and do a quick show, a 5 minute kitchen show. But at any rate, it is about, not necessarily commodity stocks or, per se, but it's just the five best rated. And when I say rated, I mean growth, profitability, safety, and value. So those stocks that I have listed have to meet that criteria, and they all do with a bullish rating, and also be able to deliver at least 2% yield dividends. So it's an exciting show. I put it up. It's a little bit more laid back, fun. If you went to it, you probably wouldn't even recognize who I am if you listen to a lot of my neo shows.
well, how can they find your new video? What do they need to search for, or how do they find your channel?
My channel is Spot Analysis. I'll be there. I took a trip to New York. Took a picture with the bull. I could not leave until I took a picture with the bull. That line is extremely long, but I got it, and that's my little avatar that's on the channel. So you'll see it. It's in a purple outline, and it's Spot Analysis. So that's just a quick video. It's 5 minutes, and I kind of advertise it as a quick show. We don't waste time. We get straight to the point, and it's a fun show, man. They should check it out.
Sweet. And you plan on doing more of those quick 5 minute videos like that?
I have fun in those. I enjoy them, and I would like to do more. They're quick, fast. They don't take a lot of time, and I feel like I can relate and reach some people that's kind of maybe at an impasse on where to go. Pop that show on. Won't take but 5 minutes. Get you some invite. We're also starting a portfolio to track it, so I'm just not throwing out companies that I don't believe in. We're investing real money in it. We're going to track it, and I think we can compete with anybody out there putting a portfolio together. So I've started a playlist to track it and prove it. I think we're just as good as anybody out there.
I think so too. So I don't know if this is something you'll want to answer, but you certainly don't have to answer it if you don't want to. But can I ask, how much are you throwing in on each of these stocks?
Well, in the video, I tell them I put 5,000 in this portfolio, and what I do is the top five, and $1,000 into each company, and we're going to watch it grow. I'm completely confident in what I put out there, and every stock that I put in these shows, I invest in them. So I'm in there. I won't tell you to get something I won't buy. So
yeah.
I think that's how it should be across the board. So I'm going in first, and the data is there. These are not, companies. I introduce them, and it's 5 minutes, so I can't go in a lot of great detail with them. But, I kind of say, hey, this is what they're paying out. They've been around this long. This is what a lot of the bull analysts are saying about them. And this is, I move on to the next stock. I don't waste time. And I mentioned in the show, time is money. So I appreciate your time when you watch it, and I reward you by getting you out of there in 5 minutes.
Hey, and I don't know many people that do that, so we applaud you for that. So tell me this, are you going to continuously be adding to this portfolio, to these specific stocks, or are you going to be putting out like other stocks that you're going to be adding to, or how's all that going to work?
Well, what I want to go up to is 20 of these videos. So 20 and 5, that's going to be 100 securities that I eventually cover, and maybe even more. Some of them are getting into shorting stocks, maybe the 5 worst stocks to stay away from. So who knows? It's fun over there. I like that, and depending on how active NEO or the EV industry in China is, I may spend a little bit more time kind of reaching out and being able to touch base with the family more often than just when NEO has a crisis.
And we can certainly understand that. So guys, for those of you who don't know Chris, he started off, he's a fundamental guy, first of all. So we started off covering NEO and NEO only. And, we finally got him to get into some other stocks. Now, he is a dividend investor himself. I mean, he's got a pretty diverse portfolio, I would say. And whatever he's doing is working for him. I'm not going to tell you guys how much he has in his portfolio, but when I saw it, man, my jaw dropped. I was pretty impressed. So, I'm glad that this man is willing to take the time to share his knowledge with us. So we really do appreciate you for that, Chris. Now, I want to tell these guys, my guys, a little bit more about why we're doing this, okay? So Chris and I were talking, we're going to do a lot of collabs moving into the future, as I'm sure you guys probably, are anticipating. But I'm also going to do a few different videos pertaining to portfolios that I'm going to set up. Now, I know that I've got a diverse crowd of listeners or subscribers, so I'm not just going to do a portfolio where I drop 100K, in there and have half of my listeners kind of be, sitting on the sidelines like, well, we don't have that much money to put in. My goal is to show everybody, because I know I've got a lot of newbies, new guys that are listening, and I want to show everybody that you can make money and you can build wealth by simply just investing and investing the right way. So I want to set up a few different portfolios to kind of cater to the diverse crowd that we have, in the Ticker family. So I'm going to have some large portfolios where we start out with a larger amount. Then we're going to have some smaller portfolios where, for instance, we may start out with $100. And we're going to track those over time. Anytime that I'm, depositing money in there, anytime that there's any update to the portfolio, I'm going to publish a video on it so that everybody is pretty much up to date on what we're doing and can follow along for those of you that want to. Now, keep in mind, I'm not a financial advisor, okay? I have to tell you that. But you guys can follow along if you choose to, and we'll track the progress and kind of show you guys the steps that we've taken in the past that have made us successful, okay, in doing this. So one portfolio that I'm starting, and I'll probably end up giving these portfolios to my kids later, but we will start one with $100. We're going to take it up a notch and then start another one with $1,000 and another one with about $65,000, which will be a dividend portfolio. We'll probably have a handful of different dividend portfolios so you guys can kind of see the difference between how much money or how much wealth, I guess, you can accumulate over time with different amounts. And we're also going to put it across different stocks. Now, the reason I really liked Chris's video earlier, I actually got to get a little sneak peek and watch it before it was even published. And man, he surprised me because he had companies in there that I've never even heard of. I would have never even thought about investing in. I didn't even know these companies existed. I think I may have only heard of one stock on there. And, well, I was going to tell you guys what that is, but actually I'm not. If you guys want to know what that is, you guys can go to his channel, and he told you that's Spot Analysis. I'm also going to put a link to his channel down in my description below. But, man, I was really impressed with these stocks. I did a little bit of research into these stocks after I actually watched the video. And these are some that are going to end up in my long term, in my YouTube long term that I'm doing for you guys. Because I really did, I did like them. They made a lot of sense. And I'm really grateful for that. But I'm going to let Chris tell you guys a little bit more about the type of research he does, well, for his dividend stocks.
It's really minimal compared to what I do for NEO. As far as like the dividend stocks, what I do is I go in and I have a criteria, and people really invest in dividends. Do you feel comfortable that your family understands dividends and the creation and what goes into it, or where do you think I need to start with that?
Well, hopefully my family at least knows a little bit about dividends, but And this is all my fault because I've never actually talked about dividends on any of my videos before. So I thought it was time now, because I've always had them in these fast moving growth stocks pretty much, and tech stocks, and also in a lot of pretty much speculative penny stocks. And so far, it's turned out really well for us, but I'm thinking more along the lines of, giving them a safety net in case some of our picks ever don't turn out, or, something bad happens. I want them to be stable. I want their portfolios to be stable.
Well, I could give them a 5-minute version, hopefully. There I go again in this 5-minute world that I've got accustomed to. But I'm pretty good at breaking stuff down. I was the tutor back in college for everyone that struggled in finance. But basically what happens is this. You have the economy changes, and you have fears of inflation, and we've talked about this in the past. And when you have inflation, it erodes buying power. So what you want to do is maintain buying power. So you flee cash and you go to maybe bonds and commodities to kind of hold on to your buying power of your dollar. We've all heard the story of the ant that had $100,000 in a mattress, and 20 years later, it was $30,000.
Right.
So we don't want to fall into that trap. So what a lot of portfolio managers will do is try to shift you over to something that would be more inflation resistant than cash. So a lot of these portfolios or securities end up into dividend paying stocks. Now what that is, when a company pays a dividend, more than likely they're mature companies. They don't have very many growth prospects, but they do have an established cash flow stream. And they say, you know what, we don't have anything else to invest in. We're through growing. Let's go ahead and give this back to the owners. So they'll have earnings. They'll have net income. You net out, all of your depreciation, all your selling SG&A expenses. Maybe you pay on your bonds, pay all your employees, you pay all of your bills, you'll have earnings. And after earnings, you'll say, okay, what is going to be our payout ratio? What ratio of that will we pay out to the shareholders? So whatever that payout ratio, when you look on the financial statements, you'll say, okay, we're paying out 60% of our earnings. Well, 40% is going to go back to return earnings, maybe cash on hand. Maybe they can see another firm they can buy that has growth prospect. And a lot of time you'll see this. 4 of the top 5 stocks I had on my video pad, I don't know if you realized it, were international companies.
Yeah.
And
yes.
I went all over the world. I mean, when you go to a dividend stock, the company is established. Not very many dividend paying stock companies are going out of business. They're going bankrupt. They are firm. They have a foothold. They're very stable. So what you want to do is look at that payout ratio. How much are they giving back to the owners? And then you want to look at how often they pay them. If you're living off these dividends, or is it quarterly, annually, semi-annual, monthly? When are you getting these dividends? But if you're like us, we still got 20, 30 years in the workforce. It doesn't matter when they pay them, so we're not going to spend them, right now anyway. But if you're living off this income stream, that's important. And also want to look at the yield. What is the dividend compared to the stock price? And some of these companies I found that fit my criteria were, 7%. That's like a very safe bond. I read a book on Buffett. I had to get you some of those books so you could share them with your family. But it's kind of like, you buying a bond and you have capital appreciation and you have dividend income. So that's where the dividends start. That's where they end. And when I set my screens up, I look for certain characteristics of companies that meet it. And when I set it up, I hit 69 companies that qualified, and I took the top 5 and made a video. So it was a real treat. It was real fun to do. I actually want to do one on value stocks where I do the 5 best companies with the most upside. So they may be suffering right now, got a bad reputation. Maybe they're going through a tough time, but they have the potential. So that'll be, where I go into the next video if Neo remains on the quiet end.
All right. So one thing I I have to ask, because I know you're always talking about systemic risk. You're talking about the stocks that 4 of the stocks were international stocks. Is that your way of kind of avoiding systemic risk, or is that was it just a coincidence?
Uh, when I set up my screen criteria, and you put search the globe, you just kind of take whatever comes back. As far as the risk concerned, with the systemic risk versus the systematic risk, that's very firm specific, and like I mentioned earlier, it's not a lot of risk that's going to be involved with a company paying dividend yields that we're looking at. I mean, these guys have so much cash, they're paying out 50% of their earnings. That's just how confident they are in their stability and looking forward. And we have the right political party, in my opinion. Again, not getting into politics, but in my opinion, the market is ripe for these type of companies. These mining, oil, gas, all these guys that are not kind of, cash-oriented companies. I think it's their time to step up and shine. They've been dormant for years, and it's their time now. And you want to maintain flexibility to be able to shift with the economy.
So should we cut down on any of the other sectors that we're investing in at this time and stick, maybe go heavier in certain sectors, in your opinion?
Well, you just have to look at it, talk with your, specific or hired financial advisor or portfolio manager. Of course, we're not here to advise them, but I will certainly feel comfortable telling you how I manage mine. I look at performance. I picked 5 guys today. I feel good about them. If they don't perform how I expect them to perform, they will be replaced. And that's all you can do, is look at what they've been doing, what they're projected to do. If they don't perform, you replace them. And it's when you start to look at your portfolio and shift the weights, maybe certain parts of your portfolio outperform, some underperform, and you reevaluate, pull some people out. That's what I'll be doing going forward with this portfolio. But when you look at it, you just got to feel where the economy is going, where your inflation is going, where your treasury bills are going, and what is being rewarded and what is being penalized. So you have a lot of EV and clean energy stocks being subsidized and rewarded. You have a lot of oil and gas, being penalized. I read an article where the first city in the United States outlawed, new gas stations. So you kind of look what's right, keep your eyes open, and follow everything. A lot of people make the mistake and just follow the market when 70% of this is economics.
Right, yeah.
And that's what I try to tell the people. I mean, you can learn finances, models, it's formulas, and it's calculus, and it gets, really hairy. I put a video out yesterday or, 2 days ago, till death do us part. And it was a little bit heavy on the math, but it was something that you could look at and kind of look behind the scenes on what goes into, the financial system. So look at the economy. That's who's going to lead the charge, and it trickles down into the portfolios and the finance and some of the decisions that you need to make from there.
Well, that was a very good explanation, and I do thank you for that. Very quickly, can you go over the difference between systemic and systematic risk? Just because I guess I didn't think about explaining that to the audience before we started.
You have systemic and systematic. And the systematic risk is, you think of a storm system where the inflationary fears, you think of a storm system and it drops rain on everybody. So everybody in the market has a bad day. That is systematic. Versus systemic is just you. You have a bad manager. You have a bad strategy. You have a bad business plan. You trying to sell a bad product. Kmart, that was systemic. I mean, it was just Kmart because Target and Walmart are still here. So that's the best way that you could try to you can diversify away from that a little bit and get into some MPT, modern portfolio tier. But that's just a lot of more calculus that that we don't need to get into.
Right.
you talk about diversification, what you can diversify away from, and it's just really hard to get away from that systematic, because think of a storm system, everybody's getting wet. You looked at inflationary fears or Powell talk today, and you ever looked at the market and the whole market was red and was like, okay, it wasn't just me.
Yeah.
That's systematic.
Seems like that's been going on a lot lately, but we're recovering well. So another thing I want to ask you about is Reit stocks, because I know anybody that's involved in dividend investing is always looking for monthly dividend income. So we're talking about stocks like we're talking about stocks like SPHD, but they kind of pay lower yields. So I guess my question is it better to get into the stocks that pay monthly dividends as opposed to stocks that pay quarterly dividends but pay a little bit more? I mean, is there some kind of benefit to the monthlies as far as maybe it gets compounded differently, or are people just wanting shorter, wanting to get paid more often? Like for the ones that don't depend on the income is what that's the ones I'm asking for.
Sometimes it's a personal preference. In theory, they should equal the same. If you have $100 in a portfolio with a certain rate of return for a year, it should, in theory, equal 10 portfolios of $10 with the same annualized return. On January the 1st, you guys should show up with the same amount of money. The difference is if you are, taking dividends early, maybe you feel like you can earn a higher rate of return than the company, once you get liquidated sooner. So you can take this as an example of, a lot of tech companies have a lot of cash sitting on the books. You have Microsoft or Apple, and the shareholders are like, hey, if you're not going to do anything with that cash, you need to give it back to us.
Right.
Because we could reinvest it somewhere else. So that's a paradigm you get into. You maybe want to talk with your financial advisor and look at your liquidity needs. That's one of the big items. They'll go over with you, find out what your liquidity needs are, how fast are you burning through cash on a monthly basis, and it may turn out that you need that monthly dividend. I would prefer to drip my dividends at this point, but every case is different, and that's something that is dealt with one-on-one. That's why you get these guys and you hire them and you go talk to them. You set your strategy out. You say, okay, I expect to live this long. I expect to die and leave this person this much money, and I want this kind of a funeral, and I want to pay all these creditors when I leave, or whatever your case is. They can put you a strategy together that caters to you.
All right, so my last question for you, Chris. I want to talk a little bit about Reit stocks. And for those of you that don't know, a Reit is a real estate investment trust. Now, these are stocks basically that pay higher dividend yields. They also have yields that pay monthly for some of these, or on some of these stocks. And these are, when you're talking about dividend stocks, it seems that people are under the impression that REITs are the way to go. So we're going to actually have to do a separate video on REITs because there's a lot to discuss, but just very, very briefly for the Ticker family, Chris, I was going to see if you could tell them, is there a benefit to investing in REITs, or should you just stick with, just any dividend stock?
Again, it's a personal preference based on your liquidity needs. And I know it sounds like a dead horse, but if you need, let's say you have a wife that shops a lot versus somebody who's not married, your liquidity needs are going to be significantly different.
Yes, you're right.
Than the next person. But in terms of REITs, they are unique. They are differently. The government, a lot of people would think they are taxed differently and punished. But in all actuality, these guys, they do have a dividend payout ratio that's mandated. They have to give, at least 90% of their taxable income out. So that's why we have an initial inflated view of these dividends, is because the government mandates that they pay all of this cash out. But it's not taxed. And guess who pays the taxes on the back end?
Who?
The dividend recipients. So you are whatever, you have to make sure, and this is another item that your financial advisor, I tell you what, I have to look at a video. I have to give you the slide pad. And what I want you guys to do is to review that slide and make sure your financial advisor or professional or someone you trust in your life are asking you all of these questions, because I think it's 8 or 9 questions on there. Remind me to get that to you so you can share it with your family. But one of them is your tax situation. Again, if you work and you make $20,000 a year, that may be attractive. But if you're making 6 figures a year, your dividend is going to be taxed at your tax rate. So you may end up paying 40% tax, whereas another dividend at one of these oil and gas companies are paying 22% if they realize those gains. So it all depends on everybody's different, your personal preference, who you're married to, what your tax situation is. And for some people, it would make sense if you're, one of these lower middle class. But if you're upper middle class, maybe you're even in that top 3%, it would be very unattractive at a 50% tax rate. You're better off investing in a traditional dividend paying company. I hope that made sense for the family.
I'm sure it will. It made sense for me, and I do appreciate that answer. So listen up, Ticker family. We're going to have to cut the video short. Well, not short, because this is probably going to be a longer video than most on my channel. But if you liked what we talked about here, be sure to let me know in the comments below. This is a new topic for us, something we've never talked about before. So I want to make sure that you guys appreciate the content, that you guys even want the content. Because if not, there's no point in us, continuing along with it. But Chris definitely is somebody you guys will want to sub to on YouTube. He talks about different topics. Like I said before, he covers everything related to NEO, but he's kind of venturing out a little bit, and he's going to be talking about dividend stocks. And I'll actually let you guys check out his channel so he can explain to you what else is going to be on there. But dividend stocks, NEO, and he's awfully good at what he does. We are going to have Chris on this channel a lot, so you guys better get used to it. But anyhow, guys, listen, let me know in the comments below, like I said, what you guys think of this. If there's anything else you want to discuss, if there's any particular dividend stocks that you want me to look into, let me know. We will be starting some new portfolios, so be on the lookout for those. And I'll actually put out a video where I give more details about that and kind of why we're getting into them, and maybe even do some basic dividend videos to explain to the newer people, the point of why we would actually want to invest in dividend stocks. So anyhow, Chris, we do thank you for being on with us. We always appreciate you coming out and getting on the channel with me. Is there anything you want to leave our family with before you get out of here?
Well, we just have to wait on the comments, Pat. I mean, maybe they have some questions and excited. I know it was fun for me to do that show with NEO being kind of slow, kind of waiting on the deliveries and earnings to show up. Kind of got bored. So yeah, I wanted to get out and do some different things. I had a lot of energy, and I wanted to, continue to put videos out. But I have not left NEO. And, as stories develop, I'll be back to address them. But until then, I just got kind of tired of sitting on the couch. I want to get out and put some videos out.
Right. Yeah, I know how that is. I'm the same way. So guys, hey, listen, I do appreciate you guys for listening and watching the show today. We will be back very soon. Who knows? Maybe Chris will be back tomorrow night and we can drop another one for you. But anyhow, let me know in the comments. Like I said, make sure you smash that thumbs up button because we need that. And we will see you guys in the next video. While I have you here, I wanted to quickly tell you about the brand new First Trade app, available for mobile or PC. The platform will give you access to powerful and easy to use tools and allows you to trade with less restrictions, zero commissions, zero fees, and you can use the first link in the description below to download a free stock today without having to deposit any money. This will greatly help out the channel and is always appreciated. And now back to your regularly scheduled programming. Congrats, ladies and gentlemen, you've made it to the end of the video. If you like what you watched, make sure you subscribe because I put out videos just like this one every single day. And please do me a favor and smash that like button if I helped you in any way, because it really goes a long way in helping the channel out and keeps me motivated to make videos every single day. Now, there's a lot of work involved, a lot of research, and a lot of time and effort into editing and putting these out daily for you guys. You can subscribe from your screen right now, or if you want to watch one of my other videos, I'm sure YouTube has some good content picked out for you on the left-hand side of your screen now. Thanks for sticking it out with me till the end, and I will see you guys in the next video.